As you all know, in 2022, our group achieved pro forma sales of £1.73 billion across our three world-leading niche businesses of Steam Specialties, Electric Thermal Solutions, or ETS for short, and Watson-Marlow. This is more than 2.5 times the revenues of 2012, when we only had two businesses, and the Spirax-Sarco divisions combined accounted for 81% of our revenues 10 years ago. However, what I'd like to highlight is that through the disciplined implementation of our organic growth strategies, supplemented by the strategic acquisitions, the group is not just larger, but much better balanced. As Steam now represents half the group revenues, Watson-Marlow generated 28% of sales, and the newer ETS business now accounts for almost a quarter of the group. At the end of 2022, our group employed over 10,400 colleagues, of which at least 2,100 are dedicated sales and service engineers, working across 146 sales or supply operating companies, which are based in 67 different countries. We serve the critical needs of over 110,000 customers in 165 countries. Those countries account for close to 98% of global industrial production. An important message I wish to reiterate today is what brings us together as one group. What are the elements that allow our group to be greater than the sum of its parts? The message is really quite straightforward. We are united by a common purpose, a common set of shared values, and a very successful business model that is deeply embedded in all three of our businesses. To underpin and strengthen our business model, we have deployed and embedded a common strategic framework that is enabling sustained growth and resilient trading margins in line with our values, while enabling our purpose, which is to create sustainable value for all our stakeholders as we engineer a more efficient, safer, and sustainable world. Our values were refreshed in 2018 and are the principles that guide all of our decisions. No result or outcome is acceptable unless it's achieved in strict accordance with our 6 values of safety, respect, integrity, collaboration, customer focus, and excellence. Our highly successful business model is centered around meeting and exceeding our customers' needs. We stay close to our customers through our global direct sales and service teams, leveraging unrivaled applied engineering and expertise with the broadest range of products and solutions available in our industrial niches. And we support all of that with our regional manufacturing infrastructure, which allows us to respond faster and efficiently to our customers' needs. In support of that business model, since 2014, we have deployed the same strategic framework across all 3 of our businesses, which seeks to leverage the direct sales business model and enhance customer bonding by focusing on the customer's economics. Instead of competing based on product economics, the traditional competition based on price or product features and benefits, our strategy is to focus on improving the customer's performance, his cost, efficiency, safety, sustainability, through the application of our products, services, and our unrivaled expertise. Our business model is based on direct sales of low-ticket items that are critically important to the performance, safety, and sustainability of our customers' manufacturing processes. For those reasons, close to 85% of our sales are driven by the customer's operational and maintenance budgets, commonly referred to as OPEX spends. Our direct sales engineers walk the customer's plants, seeking to improve the performance of their manufacturing processes, identifying unrecognized needs, and proposing solutions that solve the customer's difficult process challenges. These solutions, with typical invoice values between £20,000 and £70,000, which we refer to as self-generated sales, are a key factor that underpin our high organic sales growth and our greater resilience through the economic cycles. In 2014, we estimated these self-generated sales accounted for close to 35% of our group sales. Through the disciplined application of our organic growth strategies across all three of our businesses, self-generated sales now account for close to 40% of a much larger group sales. Our performance has been enhanced over the past 10 years as a result of the strategies deployed across the group to enhance organic sales, as well as the 14 strategic acquisitions completed since 2014. Group sales have grown at a compound average rate of 9.3% between 2013 and 2022, markedly ahead of the already strong 8.7% average growth rate of the previous 10 years. Given our exposure to almost all industrial sectors, global industrial production, or IP for short, is the best predictor of demand for our group. As a result of our direct sales model and ability to self-generate sales, we have typically outperformed global IP growth by a factor of 2 when IP was expanding, with organic sales falling close to 1 times IP when the world suffered the global industrial recession of 2009. As you can see from this graph, in the last 10 years, through the application of that strategic framework that I referred to earlier, our outperformance to IP has increased to an average 2.4 times, while organic sales declined less than 1 times IP during the 2020 global industrial recession, which evidences increased resilience through economic cycles. Simultaneously, our adjusted operating profit has grown at an even faster rate than sales, with 2022 profit almost treble the value of 2012. Consequently, the group's reported operating profit margin averaged 23.2% in the 10 years between 2013 and 2022, significantly higher than the 17.4% margin of the previous 10 years. It is worth noting that the 2017 acquisitions of Gestra and Chromalox joined our group with profit margins in the mid-teens. Good margins for industrial businesses, no doubt, but lower than the group's 24.6% underlying margin in that year. And this, therefore, had a dilutive effect on the group's reported profit margin since 2017. Nevertheless, the actions taken over the past 6 years to improve the profitability of those acquired companies, align their performance with the rest of the group, has reduced that dilutive effect and is narrowing that gap between our reported profit margin and the underlying margin of the group, which remains at close to 25% over the last 5 years. The increased profitability, coupled with robust working capital management, has allowed for increased capital and revenue investments while maintaining our strong dividend growth rate. In the period of 2013 to 2022, our dividends grew at an average compound rate of 11.1%, ahead of the already strong 10.6% compound growth rate of the previous 10 years, and maintaining our 55-year dividend growth performance. In 2022, we also completed 3 strategic acquisitions that strengthen and broaden our platform for continued organic growth. In January, we acquired Cotopaxi to enhance and accelerate the contributions digital technologies can bring to our Steam Specialties business, and indeed the wider group. In September and November of last year, we completed the acquisitions of Vulcanic and Durex Industries that significantly enhance and strengthen our ETS business. These 2 strategic acquisitions expanded ETS's 2022 pro forma sales by over 70%, growing group revenues by 10%, adding 11 manufacturing facilities and over 1,100 new colleagues, including direct sales and design engineering resources. Vulcanic and Durex Industries increased ETS's addressable market by over 5% through new products, technologies, and capabilities, expanded ETS's global market share from 6 to 10%, and enhanced the opportunities for new revenue synergies by leveraging products and customer contacts across complementary brands and geographies. Other strategic benefits are the improved geographic balance, strengthening ETS's presence in faster-growing end markets such as food and beverage, equipment manufacturers, semiconductor wafer fabrication sectors, and broadening our capabilities to support the strong global drive towards decarbonization of industrial processes. Also in 2022, we completed the development and launch of Target Zero, the group's first suite of solutions to decarbonize critical industrial processes. Target Zero is the result of a multi-year collaboration between the Steam Specialties and the ETS businesses, seeking to leverage the electric heating technologies of Chromalox with the direct customer relationships of Steam Specialties. We are already securing orders for the Target Zero solutions from various external customers and are also installing all 3 solutions in our Running Roads facility here in Cheltenham, which we expect to be fully decarbonized by the beginning of next year. The increasing adoption of net zero targets, driven by demands from all stakeholders in society, will have a profound effect on industrial activity over the coming decades. The focus of our group for over 100 years has been to help our customers make their industrial processes more efficient and to reduce their energy costs. However, we now also have the opportunity to help our customers make their businesses more sustainable. Steam itself is a clean technology, but it is still mostly raised by burning fossil fuels. The International Energy Agency identified that heat accounted for 50% of global final energy consumption in 2018, with half of that energy consumption being from industrial processes. Heat in total also contributed 40% of global CO2 emissions. We believe the scale of the decarbonization opportunity is significant, as only 5% of industrial heating processes are currently generated using electricity. Our group is uniquely positioned to capitalize on this unparalleled opportunity, and over the next few decades, we expect decarbonization of industrial processes to represent an exciting and incremental driver of revenue growth. In late 2019, as I reflected with my colleagues on the areas of progress and success achieved through the implementation of our strategies. We identified 3 areas that required an acceleration of our efforts. These were sustainability, inclusion and diversity, and digital solutions. In mid-2020, we got a bit distracted by COVID, but we quickly got back onto it. By mid-2020, we created a new group function and a new senior executive role, the role of Group Head of Sustainability, to whom we commissioned a full refresh of our sustainability strategy to date. And this new refresh strategy was launched in mid-2021 and internally branded One Planet, Engineering with Purpose. 2 years later, the group's new sustainability function includes more than 45 colleagues across all 3 businesses globally and has already achieved significant progress. Given the focus enabled by our One Planet sustainability strategy, by the end of 2022, the group's Scope 1 and Scope 2 greenhouse gas emissions are 41% lower than our 2019 baseline. And 57% of our global electricity demand is procured from green sources. Our colleagues have completed 97 biodiversity projects, as well as donating more than 22,000 hours of their time to carry out volunteering activities in the communities in which we operate. In late 2021, we created the Group Education Fund with the aims to improve diversity in engineering, tackle poverty in the communities through education, remove barriers to education, and improve female access to education. I am extremely proud that in 2022, the first year of the fund, we donated over £1 million to 51 projects in 26 different countries and have set ourselves the target of donating up to £15 million by the end of 2030. The second priority area defined in mid-2020 was inclusion and diversity. To accelerate our focus and actions on this important matter, we also created a new group function and recruited externally for a new role of Group Head of Inclusion, Equity and Wellbeing. In 2021, we developed and launched internally our Group Inclusion Plan, internally branded Everyone is Included, which established 10 group inclusion commitments that apply to everyone that works in our group globally. Now, I'm not going to go through the details of those commitments today here with you, but they're well described in our annual report. But these inclusion commitments are designed to enable everyone to be their true self and to thrive within our group. Our group inclusion plan is also helping accelerate progress in the attraction, development, and promotion of talented women and ethnic minorities. Attracting the best talent available, irrespective of gender, race, creed, nationality, sexual orientation, physical abilities, is a top priority for our group and is to create the right internal conditions for everyone to thrive and grow professionally within our group. One of our inclusion goals is to reach a minimum of 40% women colleagues, especially in leadership positions. At board level, we have achieved that goal since 2020. While the intake of women in our global graduate program has been at or above 50% since 2018. Women represented more than 32% of our senior executives in 2022, more than double the 15% representation when I first measured this ratio in 2014. and we have a clear path to reach our goal of 40% by 2025. And finally, our third priority area defined in the mid-2020s was digital. To accelerate our focus and actions in the digital space, in 2022, we developed our group digital strategy and created yet another group function. We're putting our money where we put our mouth. In order to enhance our business model through digital technologies and solutions. In early 2023, we recruited our new group head of digital to lead the implementation of our digital strategy that has 6 strategic initiatives focused on enhanced customer experience, supply chain efficiency, innovation and agility, life cycle customer value, an enhanced enterprise, and an orchestrated platform. Given all that I've shared so far, you should now be able to better appreciate the progress we've made over the last few years to build a true group of companies that is stronger, more resilient, more inclusive, and sustainable, and is delivering for all of our stakeholders. We are therefore very confident that our group is uniquely well positioned for continued sustainable growth into the next decade. Our 3 businesses are well structured and equipped to continue leveraging our proven business model. And through the disciplined implementation of our successful strategies, we will continue improving upon what we already do well. Additionally, we are very excited by the opportunity to enhance our business model through digital technologies and solutions, while the opportunities unfolding from the decarbonization of industrial processes will ensure incremental growth over the coming decades. This chart summarizes our growth performance of the past 2 decades for all 3 of the businesses. You can see it broken down there with Steam in the dark blue at the bottom, Watson-Marlow in the pale blue in the middle, and the ETS business starting in 2017 in the purple on the top. And therefore, this graph reinforces, and you can see again the summary of what I said before, the 10-year growth CAGR and the outperformance to IP and how that compares to the previous 10 years. So for us, this is the example of those strategies actually changing, improving the business despite the greater scale of the business. And so therefore, this reinforces our conviction that today we have one group with 3 strong growth engines, very well positioned for sustainable long-term growth. And so to summarize, over the past 10 years, we have built upon a successful track record to enhance our strong historic performance. We have developed a stronger and better balanced group with 3 leading growth engines. We continue reinvesting back into the businesses to ensure we can sustain our performance and improve our resilience through economic cycles, while creating value for all of our stakeholders. We are very well positioned to capitalize on the vast opportunities arising from the decarbonization of industrial processes, and we remain focused on sustainable long-term growth that delivers our purpose. Thank you very much, and thank you for joining us here today.